Hi and welcome to the Astute podcast. The reason behind the podcast is because we work with a lot of small to medium-sized businesses and we get the same questions over and over. So we thought we'd run a podcast series interviewing those people that are professionals in their field to help people to really grow and establish their business. And today we're interviewing Gerry McKenzie from Your Pathfinder. So Gerry was originally from Edinburgh. He studied University of Edinburgh where he studied agriculture. He ran his own loch and fishery in Scotland, which is cool. I want to find out more about that. You've worn many hats over the past over the years. We've got the State Manager of Modern Group, Operations Manager of Green Incentives. You've been a National Account Manager for Australian Solar Investor, a Freedom Coach with Freedom First. On a personal note, we found that you like coffee and the beach, prefer possibly at the same time. And now if we go into Your Pathfinder are financial strategists. Their mission is achieving a path to an abundant retirement. One of their keys to success is future planning and vision of where you're heading is key to achieving and living your best life. And I grabbed a cool little tagline off your website which will grab people's attention, which is who gets more cash, the bank, the taxman, or you? Welcome, Gerry.
Well, thank you very much. What an intro! I want to speak to this guy.
I know you've done a lot. Come on. One thing I did want to touch on first is, do you want to give us a bit of an introduction about how Your Pathfinder came about and kind of the difference between your financial strategist and your financial planner?
Yeah, I would love to do that because a lot of people do get a little bit confused about that. Not about the business. The business got together. There's sort of there was four. We call ourselves brothers, but sort of brothers in business, and that we kept meeting in various businesses, various forums all the time. And it was about 2 years ago, we all met and said, listen, guys, let's get together. Technology was coming ahead then because we lived in different parts of the country. And we said, let's get together and pool all our knowledge and start off a business together. So we've got 4 founder members. And that's how Your Pathfinder started off. But the rest of it is, the difference between financial planning and financial strategy. Now, a lot of people do get confused about this. Financial planners are great for everything to do with superannuation and insurances. So that is their remit. And for financial strategy, we're really looking at getting ahead. Getting our clients ahead in financially in a way that's going to suit them. It's going to suit their objective, but it's really to do with property. Now, property is our main driver, but financial planners would have insurances and funds and things like that, which they are licensed to do. We're licensed to do property, so we're very much property based and looking at how property can help you get ahead in Australia. We see so many people. Of getting to my age and having $3 or $4 or $5 million worth of assets, but still having $3 or $4 million worth of liabilities as well.
Yeah.
And that's doing it the wrong way. So we put some clarity on this and we show people how to get ahead better.
Yeah. Okay. So what's I thought I put it out there for some questions, so we'll kind of get to them, and I think we'll just run through a few of those questions. So a couple of them have come through, which maybe a little bit more on super, but we've got property in there as well. Where do you guys sit with shares and things like that? That's sort of more financial planning, or
that is more financial planning. Although share traders are different from that, but mostly financial planning do the share. Work with share traders, and one of our founder members was a share trader in Singapore for 12 years. Yeah. So we know a lot about shares and how that works. And we do, people can make decent money out of shares. I mean, if you know what you're doing, but you really have to be on the ball all the time, and we hear more cases of people not doing so well with shares than doing well with shares. Yeah. And that is something that is it depends on your planner, it depends on your strategist who's looking after you, but and how much you're working with them. But it tends to be a hands-on investment, that where you really have to know what you're doing, and especially in times like just now when the share market is so volatile, it's very difficult to just choose the right level to go in at and the right level to come out at. I always look back to some of the legends in investment, like Tony Robbins, for instance, and he's basically buy shares, put them on over a number of years, keep buying shares, and over 25 years, 30 years, you're going to do well.
Yeah.
They're going to go up, and that's been the strategy for a lot of people, and there's nothing wrong with that strategy.
Yeah.
I think where we come in is a lot of people don't have 25 or 30 years left, me included. So, you got to try to think round the box, outside the box a little bit, and what can we do to speed things along a little bit.
And that's interesting you say that, because we've got a self-managed super fund ourselves, and we've had it for probably about 5 years now, and everyone kind of told us we were a little bit crazy to do that, because we put majority of it into shares. But my thoughts were, we're not looking to retire anytime soon. So in another 30 years, surely we're going to make some kind of money off them. So yeah, it's definitely an age factor of where you are in that spectrum of how long, you've got to make that money.
That's right, and it's very important. You've looked at that and you said, right, okay, we've got a bit of time to do this. We're not going to look at them every day, because that just drives you nuts.
Especially not now.
Especially not that, yeah. And then just let it run for a length of time. And I think over time shares do pretty well. But it's just the time factor that's involved.
While we're on age, I have a question here. So my husband and I are in our early 50s. Do you have any tips on what we should be doing to prepare better for our financial future?
Yes. Anything you're going to do if you're in your early 50s, you want to be doing before your mid-50s.
Mm-hmm.
If you're borrowing with any bank or anything like that, as soon as you hit 55, you're going to have problems with that, and we're going to start loading you with all sorts of things. So it's very good to get a plan in before then, and look at, and as long as everything's done before that time, there's no problem with it. But the banks are very interested when they look at lending to a client. They're very interested in exit strategies.
Mm-hmm.
And how long have you got to that exit strategy? Well, my exit strategy is going to be a lot sooner than your exit strategy. So, your question asker is going to be 50 plus. So they can't have a 30-year loan because it'd be 80 by the time it finished. But it doesn't mean that that it would be that time. But we've got to show the bank there's an exit strategy. So do something sooner rather than later, and look at a sort of a word that a lot of financial planners use is transition to retirement. Look at sort of what transitions you can make just now before retirement, because getting to 60, 65, 67, whenever they're planning on retiring and going, right, retiring in 6 months' time, ain't that too late, So get on with something and find out what it's really a bit of and it's what we do with clients all the time. Ask them what is their income. What do you think their income will be when they retire?
Yeah.
And we can put all that out for them. We use government calculators as the main source on that, and show them where they're going to be when they retire, and then find out if we're a good fit for them, and then find out if they want to actually proceed with a plan.
Yeah, and that was another question that someone's got. I can't remember where it is there. Here it is, yeah. Why do we need one, and kind of what are the benefits? And my initial kind of response to this was, in business, if you want to grow your business, you kind of connect with that business coach. If you're looking to lose weight, you kind of connect with that PT, that, physical coach. And that's kind of what you guys, as I see it, is you can do it on your own, but if you really want to get the best results, that's when it's time to engage someone, or you can get your benefit quicker by engaging professionals, I guess.
I would totally agree with you there, Suna. You can do all of this by yourself, and I always make that quite clear to clients. But it's there's a lot of things, as you know, with the bookkeeping that you help me with, or help our company with. We could do it by ourselves, but it would take us all month to do it. So we choose not to do it.
Good choice.
And it's the same sort of thing. So when it comes to plans, there's a lot of things that we can show people, and there's a lot of clients that I'm seeing down here. Just to explain to everybody, I'm away from home just now in Canberra, but a lot of clients I'm seeing down here who are very professional-ended, top-end earners, and it's not that people don't know the strategies; they just don't know how to implement them in their lives.
Yeah.
And we can. There's a lot of muddy water there, and we can clear that water and sort of show people the way forward.
Yeah. This kind of touches on. I get a lot of. I do a lot of sort of cash flow planning, budgeting with small businesses, and one of the exercises that I do with people when I'm doing that is kind of ask them what they need to earn personally, or what is their personal budget. And the blank faces and the blank stares that I get back from that, I find really quite surprising. Obviously, I'm a numbers person, so I know, personally what we need to earn for us to achieve our kind of personal goals and objectives. So the amount of people that are in business and successful business owners that just don't have an understanding of their personal wealth or their personal growth, or don't even think about it, all their eggs are in the basket that this business is going to be saleable or it's going to be their plan for retirement. At the end, when, we've learned that so many businesses just aren't quite saleable without that predominant person in there, or not what they thought. So I think there's a lot of room for, going away and sitting back and having a look at your personal finances and where you are. What questions would you get people to kind of think about before they come and, talk to you?
Well, one of the things is, how much do you want to live on your income in retirement? And are you on track for that? And if you don't know how to say, can you show me what we're actually on track for, and we can work that out for people. And that is, it seems pretty basic, but it's actually quite difficult to achieve when you look at your super, and you might look at a superannuation statement from a company, and they're saying it could be between here and here, and say, well, I'm going to pick this one. Everybody picks the top one all the time, but in life it could be, at the moment, people who are retiring right now will be down here.
Yeah.
So what can I put in place to mitigate these fluctuations? So look at what they are, and also look at what their life would be when they do retire. What do they want to do? Do they want to travel? Do they want to stay at home? Do they want to stay in the house they're in at the moment? Do they want to downsize? All these sorts of things, are very, very important. And we're now looking at helping and assisting clients to look at property-based solutions that they might move into when they retire.
Yeah.
So in 12, 15 years' time, I will move into that place, which is a nice little unit or a nice little place down by the coast, that's surrounded with everything I want. But that's in the area I want it to be in. Yeah. And just having a bit of a plan doesn't mean they have to do that.
Yeah.
It means that option's there, and it's just about giving people choices.
Yeah.
And you don't have a plan, you're not going to have the choices to have that. I remember when I was young, it was a lot of years ago, my dad was a chartered accountant, and he taught me a lot of, you won't believe it by our bookkeeping standards, but he taught me a lot of what I know about numbers as well. And numbers and mental arithmetic in my head are easy. And I remember him saying to me, he said, you've got to plan what you're going to do, Gerry. You've got to plan what you're going to do. And I was like, typical 20-year-old, why do I have to have a plan all the time? What's this plan stuff, And it really comes back to haunt me that, because he said to me, he said, an idiot, and my dad was quite harsh. He said, an idiot can beat a genius.
Yeah.
With a plan every day of the week.
Yeah.
And really, it comes down to that. If you have a plan and you know where you're going, and it's fluid,
yeah,
you can make these alterations, and you're going to come, the chances are you're going to come out on top.
Yeah, and that's, kind of goes back to having that coach. Like a business coach will always get you to set your 12-month, your 9-month, your 6-month goal. Your PT will tell you how much weight do you want to lose, how much muscle do you want to build. Like, it's having that plan and the steps along the way to achieve that goal.
Right. And it makes you've then got your goal, you've got your objectives, and they keep you accountable as well.
Yeah. So one of them is, tips on paying off the mortgage quicker. And this is just all about having that plan. Like, what do you want to achieve? What's the benefit of paying that off earlier? Should you look at keeping the funds there and putting it into something else? So it's all sitting down and working out what's the long-term goal.
Absolutely. And I mean, if you look at your mortgage, and we get clients to say, well, what's your mortgage just now? And most people are going to say between $2,000 and $4,000 a month, in that sort of bracket. So say $3,000.
Yep.
And say, right, that's $36,000 a year. If you were to pay your mortgage off 10 years early, oh, that's $360,000. That's worth having a chat about.
Yeah.
You know, so that's what that's what it's all about. And who do you want to give that money to? The bank will accept it every day of the week. You know, they'll take your $360,000.
Yeah.
They don't pay it off any earlier than you can.
Yeah.
Although they'll give you certain tips, but they won't show you how to do it. And then if you do it, the money's in your account. So you have choices to do what you want to do with that.
Yeah. Yeah. Okay, cool. That's interesting. I'm going to pick a property one. This is more about what your thoughts on the property market and what's happened with the spikes on the higher end at the moment, and how you think it's going to progress as things normalise after all of this.
Right. Well, the new paradigm of after COVID kicks in, it's really up there a bit. I mean, you know where I live, down at bottom end of the Gold Coast, and Gold Coast has just been booming.
Yeah.
You know, we're just Sunshine Coast is even worse. You know, it's you're not properties are on the market for 3 days up there and they're gone. That isn't going to happen forever. But a lot of people are moving to southeast Queensland for many reasons. The major reason is there's a lot of infrastructure in there. It's a nice place to live, and land is still relatively cheap there. Okay. Now, if you're buying for investment also in southeast Queensland, you're going to get a fairly good return. You're going to get around about 5% return on rents. So if a property's cost you 500,000, you're going to get about 500 a week. That's 5% return. Yeah. Okay. So if you had that same property in say Victoria, you're only going to get 3% return. Mm-hmm. So people are saying, well, I want to go towards somewhere that's going to give me the best return, and that's cash flow return, not capital gain. But we are seeing that capital gain is something we build into that we talk about in our plans, but it's not the main driver. Yeah. A lot of people think, oh, I'll buy a property and I'll sell it in 10 years' time. It'll be worth 300,000 more, and I'll have 300,000 in your pocket. You've got capital gains tax. You've got all sorts of things to think about. And is it going to go up? What has it done to your finances in that process? And that's what we have a plan. We can sort of work out, well, in that interim period, this property has paid off your mortgage, and you do have 350 gain or 200 gain or whatever the gain is. And these are the consequences of capital gains, and this is how we might be able to mitigate that. Yeah,
I've got these are from a couple of my younger clients. And so I think we can kind of answer them together, a few sort of mush in. So the business is doing okay, but we're drowning in personal debt and help. That was in capitals. I like to, I don't know how much of this you want to answer, but my kind of strategy, or what we kind of tell people, is to have a look at what your liabilities are, write down how much it is and what the interest rate's on there, and start chipping away at them, kind of like that. And again, that's just having a plan. When do you want to be debt free? Is it in 6 months? Is it in 12 months? And, putting them away. I mean, there's other strategies of actually going and getting, like, depending on the size of the debt, combining them all together to pay them off that way. What are your thoughts on that?
Right. I think it depends on the size of the debt, depends on where the debts are. And I really like what you're saying. Just be responsible for them, have a plan, and start chipping away at them. Nothing wrong with that. That's a good plan to start off with. If they are quite big, you just think, listen, I'm just getting nowhere. I really am drowning in debt. Consolidation is a good idea, and we have debt consolidation specialists that we work beside that can bring that debt together. There's clients at the moment that have over 140,000 in credit card debt, and they're paying that off at 20%. So if you just add that up, it's 30 grand a year nearly. It's just crazy, and just an interest, and they're still not paying off the debt. Yeah. With debt consolidation for them, I can see why there are quite a few companies out there, that do look at budgets, look at people's finances, and help them with that. They're good as well if you really are drowning in debt, and they will give you a plan. They'll keep you. They will keep you honest with it, but they also have conditions with them as well to stop you getting out of debt. Yeah. So you've got to be very careful with them. If you end up with a Form 9 and you cannot do anything else in that 5-year period, you really got a problem. So having a chat with these sort of people. It's not going to cost them anything to have a chat with them, see where they're up to, and give them a bit of advice and point them in the right direction. But looking at the debt, being responsible about it, being happy to talk about it.
Yeah, exactly.
Not all debt is bad, and and it can certainly get out of it pretty quickly.
Yeah, great point. Like I kind of say, business debt is way healthier than personal debt. But it's not to say that all personal debt is bad either. It depends on what you were trying to achieve at that time. So I think in that space, I think we're going to see a lot more problems sort of in 6 to 12 months' time, because a lot of people have borrowed for these assets and whatever else. So again, I'm not against business asset debt, but I think a lot of people have sort of gone in a little bit too deep recently with all the stimuluses that are around.
Yeah. You know what I was talking about? We were talking about new cars and things like that for our business, and we said, yeah, at the moment, just not going to move on that. Maybe the end of this financial year, we'll have a look at it. But at the moment, because it might be business debt, but it's still we're the guarantors.
And that's what I say to people: if you were looking to purchase a car within the next 6 months, bring it forward and take advantage of this. But if it's not on your radar, don't make it on there just to.
Man, I keep seeing this car I like. They're driving around me now.
I mean, the idea is nice. I floated the idea as well of a new car, but it's not going to happen this year. But again, the government always puts out incentives and tax brackets for businesses for those kind of things. It's just how much that'll vary. So I can't believe we're running out of time. I like to try and keep them under 20 minutes. So thank you very much for your time. But I do like to finish. Have you got anything to finish on that you wanted to say before?
I think, the coming back to speaking to clients, there's no upfront costs with us when we're speaking to clients. We like to, but not all clients are a fit for us. So it's meeting clients either online or on the phone, first of all. Then if it's Gold Coast, we'll meet them face to face. But if it's farther afield, we sometimes do online. But there's no cost in that, and it's just having a chat with people and see if they're going to be a good fit. We've got a lot of experience, a lot of grey hair, some no hair, but with the experience that comes with that, we do enjoy helping people, and that's why we set the business up, to try and get, for Australia is a first world country, but with less than 3% of Australians retiring and not having to depend on the government pension, it's a ridiculous figure. It's almost third world figures, so that's why we set the business up, and just to point people in the right direction.
Yeah, that is crazy. And I've written here, so for those that are in their 50s, it's time to hit the banks for loans before they reach their mid-50s. And it's all just about having that plan, having a chat about it. What do you want to know? And knowing what your personal finances are. So personal finances as in now, what debts you've got, what income you've got, but also what it is that you need upon retirement as well. Kind of need those to go in to have the discussion. Now, I'm going to finish on a rapid fire. I don't want you to think about the responses. I want you to answer them. First CD you ever purchased?
David Bowie.
Ah, nice. Current book that you're reading?
What's it called? Can't remember. It's Bryce Courtney's one. I can't remember.
Okay, what's your favourite book you've read, or top book that you'd recommend?
The favourite books that I read to really get me out of work mode is I'm a bit of a romantic in the Wilbur Smiths ones and the Wilbur Smith series, and I just love them. They just get my mind empty. I mean, Africa.
I can tell. I can hear it in your voice. And what has been the best thing for you about COVID?
I think spending more time on our, at home, learning, doing a lot of personal development there on myself, because you spend so much time traveling around and sitting still. What has been great for me, and also I managed to lose about 5 kilos. So getting out there, walking along the beach.
I was going to say all them walks along the beach with your coffee.
Yeah, that's it. That's my health regime. Yeah.
Well, thanks a lot for taking the time to chat to us today and answering questions. As I said, I was quite surprised by the number of questions that are out there and people that are kind of in that space where they feel that they don't have the money to see a financial planner. Whereas I wanted to flip that it's not always about that. It's just, having the plan to get to that point. So thank you for your time, and we hope you enjoy it down there in Canberra.
Thanks very much, Suna. Thank you very much, and we'll hope you have a nice day up in Queensland. It's looking a bit cloudy down here.
No, it's nice and sunny here as always. Thanks, Gerry.